Hi traders, Rohit here. This is my first video on YouTube. In this channel, I am going to upload videos related to the stock market trading and gives you genuine information about trading which will definitely helps you to become a better trader. In this video, we are going to talk about types of trading days. Generally, people are aware only about two types of days, that is trend day and sideways day. But beside these 2 days, there are another 6 major types of trading days occurs in the market. No matter which instrument you are trading, which stock or which indices you are trading, you will see these 6 major days keep repeating themselves in the market. So without delay, let's begin the video. So our first type of day is trending day. On trending day, market moves in one direction throughout the day. On trend day, market will open at one end and closes at another end. Trending day are of two types, uptrend and downtrend. In uptrend, bulls open the market aggressively and pushes price to the new high like this as you see in the diagram. And in downtrend, bear opens the market aggressively and pushes price to the new lows like this here. Generally, trending day happens after a consolidation. If you see a consolidation in the market for 1 or 2 days, then you may see a trending day in upcoming session. Trending days are generally marked with small opening gaps in trend direction. For example, let's see, this is the consolidation in the market. After consolidation, if market opens gap up with bullish candle, then you may see a uptrend like this. And if market opens gap down with bearish candle, then you may see a downtrend like this. This little gaps is nothing but the indication of trending day. This is the example of trending day. Here, market opens at one end and closes on another end. Our next type of day is double distribution trending day. Double distribution trending day is a trend day, but it no way has the confidence or conviction of trending day. During this type of day, the market will usually open the session in quiet manner, trading within a fairly tight range for the first 1 hour of the session, thereby creating a narrow initial balance. Initial balance is nothing but the high and low made in the first 1 hour of the market open. On this day, market will form a narrow initial balance like this in the diagram and breaks either high or low of the initial balance and gives move in breakout direction. And during late afternoon, it again start consolidating like this here. Let's see it on a chart. Here, market forms a narrow initial balance, breaks the low up and gives the move in downside direction. Same thing happens in upside direction as well. This type of day is called as double distribution trend day. Why it is called as double distribution trending day? Because there are two distributions. First is here and second is here. That's why it is called as double distribution trending day. Our third type of day is typical day. On this day, price rallies or drop sharply to begin the session and creates the wide initial balance and moves quietly within this range for rest of the day. On typical day, market opens aggressively and form wide initial balance like this shown in a diagram. And then price start trading quietly between the initial balance as you see in this diagram. This is the example of typical day. Here market opens aggressively and form wide initial balance. In start it looks like it is going to be a trend day, but suddenly price reverse and then for rest of the day market trades quietly between the high and low of the initial balance. This type of day is called as typical day. Our next type of day is typically expanded day. On this day, initial balance formed is of average type. During an expanded typical day, both upper and lower boundaries of the initial balance are susceptible to the violation. On typical day, I said initial balance is wide, but on typically expanded day, initial balance will not be too wide. It will be of average type. Like this, market will form the average initial balance and for some time it will trade quietly between the initial balance. And it looks like it is going to be a typical day, but during mid to late afternoon, it will break from one of the boundary of initial balance, either high or low. In this example, lower boundary of initial balance is taken, and then price keeps trading in downside direction. This same thing happens in upside direction as well, like this here. This is the example of typically expanded day on the chart. As I said, on typically expanded day, initial balance is of average type. Here market form average initial balance and then for some time it trades within the initial balance quietly. And during mid-afternoon, it breaks the low of the initial balance and trades in breakout direction. This type of day is called as typically expanded day. Our fifth type of day is range day. On this day, initial balance is as wide as that of typical day. But instead of quietly trading within these two extremes throughout the day, like typical day, buyers and sellers are actively pushing price back and forth. Range day is more like a badminton match. In badminton match, one player hits the shuttlecock toward another player and player on another side hits the shuttlecock back toward the first player. And same thing continues. And this same scenario is happening in range day. Look at the diagrammatic representation of range day. After forming wide initial balance, prices are aggressively traded between the boundary of initial balance. This is how days looks like. This is the example of range day on chart. Here, after the formation of wide initial balance, price rallies to the high of the initial balance and then again fall back toward the low of the initial balance and again rally back to the high of initial balance. This type of day is called as range day. And range day are common days occurring in the market. Last type of day is sideways day. On this type of day, price is stagnant as both buyers and seller refrains from trading. This type of session usually occurs ahead of release of any major economic report or news event.
On sideways day, initial balance will be of average or narrow type.
And market trades very quietly between the range. On this day, it seems like big traders are on vacations. This is an example of sideways day. Market trades very quietly in one range for whole day, and thereby there is no big move in market. Sideways day mostly happens before the big event like budget day, RBI policy, election result, or any other big event. This is all about types of trading day. If you like this information, please like, share, and subscribe to the channel.